Asian markets were hammered at the start of this new trading week, with investors spooked by the spread of the coronavirus pandemic as more countries announced measures to protect their borders. Let's start with Singapore, where the benchmark saw its biggest one-day drop since October 2008. The STI down 7.4%. This after the government banned short-term visitors from entering its borders. Meanwhile, the KOSPI is in the red as well by 5%, and Australia's S&P ASX 200 fell by about the same margin, with new government stimulus doing little to soothe recession fears. Let's move over to China. The Shanghai Composite fell by 3%. Losses there limited by signals of further government support for the market and as the number of new cases drop. Hong Kong's Hang Seng closed at its lowest in more than 2 years, falling nearly 5%. India's benchmark, Sensex, suffered its worst ever single-day loss, giving up more than 11%. Investors there were stuck in a selling frenzy, with businesses disrupted by COVID-19. Several districts were forced into lockdown. The markets in Japan bucked the trend, though. The Nikkei closed up by 2%. And on optimism, the Tokyo Olympic Games will not be cancelled. And European markets are not being spared, though, either. The FTSE down by about 4% and the DAX by about 3%. Market sentiment there also dampened by the failure of the US Senate to approve a proposed $2 trillion economic stimulus plan on Sunday.